Hey there, future millionaires. Have you ever dreamed of a life where your money works for you instead of the other way around? Ever wonder how to make your money work as hard as you do? Well, the secret lies in smart investing. The answer is simple: investing. By putting your money into the right places, you can watch it grow exponentially over time. And the stock market? That's your ticket to financial freedom. It's a dynamic world where fortunes are made and you can be a part of it. Imagine this: your money growing while you sleep, eat, or even binge watch your favorite shows. Sounds pretty sweet, right? This isn't just a dream, it's a reality for many. That's the magic of compound interest, and the stock market is where it happens. Compound interest means your earnings generate their own earnings, creating a snowball effect of growth. Sure, saving money is important. It's the first step towards financial security. But with inflation eating away at your hard-earned cash, you need it to grow faster. Inflation can erode the value of your savings over time, making it crucial to find ways to outpace it. That's where stocks come in. Investing in stocks can provide the growth needed to stay ahead of inflation and build wealth. They offer the potential for much higher returns than traditional savings accounts. While savings accounts provide safety, stocks offer growth. So, are you ready to take control of your financial future? By learning and investing wisely, you can set yourself up for long-term success. Let's dive into the exciting world of stock market investing. Together, we'll explore strategies, tips, and insights to help you become a savvy investor. The journey to financial freedom starts now. Now, before you start throwing your money at every stock you see, don't worry, we've all been there. Let's break down the basics. First up, we have individual stocks. Think of them like pieces of ownership in a company. You buy a share of Apple, you own a tiny slice of the tech giant. Exciting, right? Next, we have index funds. These are like baskets of stocks that track a specific market index, like the S&P 500. It's like investing in the entire stock market with just one purchase. Finally, there are ETFs, or exchange-traded funds. Similar to index funds, they offer instant diversification, but with more flexibility in terms of investment focus. Now that you know the players, it's time to choose your playing field. The world of investing can seem vast and overwhelming, but with the right tools and platforms, you can navigate it with confidence. Don't worry, it's not as intimidating as it sounds. With a bit of research and the right guidance, you'll find that investing can be both accessible and rewarding. For beginners, I recommend user-friendly platforms like Robinhood, Vanguard, and Fidelity. These platforms are designed to cater to new investors, offering intuitive interfaces and a wealth of resources to help you get started. They offer simple interfaces, educational resources, and low fees. Educational resources are particularly important as they can help you understand the basics of investing, from how to read stock charts to the importance of diversification. Perfect for dipping your toes into the market. Starting small and gradually increasing your investments as you become more comfortable can be a great strategy. Robinhood is great for beginners with its commission-free trades and easy-to-use app. The app's straightforward design makes it easy to buy and sell stocks, track your portfolio, and stay informed about market trends. Vanguard is known for its low-cost index funds, making it ideal for long-term investors. Index funds are a popular choice because they offer broad market exposure and lower risk compared to individual stocks. Fidelity offers a bit of both worlds with a wide range of investment options and research tools. Whether you're interested in stocks, bonds, or mutual funds, Fidelity provides the resources you need to make informed decisions. Remember, choosing the right platform is crucial for a smooth investing journey. Each platform has its own strengths and weaknesses, so it's important to consider your own investing goals and preferences. So, take your time, explore your options, and find the one that suits your needs best. Investing is a personal journey, and the right platform can make all the difference in helping you achieve your financial goals. All right, now for the fun part, picking stocks. But hold on, cowboy, don't go throwing darts at a stock board just yet. Successful investing requires research. First, look at the company's financials. Are they making money? Are their revenues growing? These are crucial indicators of a company's health. Next, consider their growth potential. Are they innovating? Are they expanding into new markets? These factors can significantly impact their future performance. Finally, check out the PE ratio, which compares a company's stock price to its earnings. A high PE ratio could indicate an overvalued stock, while a low one might suggest an undervalued gem. Section 5. Don't put all your eggs in one basket. The power of diversification. Now here's a golden rule of investing. Never put all your eggs in one basket. Why? Because if that basket falls, you lose everything. That's where diversification comes in. It's all about spreading your risk by investing in a variety of assets. Think different sectors, industries, and even geographies. For example, a well-diversified portfolio might include stocks from technology, healthcare, energy, and emerging markets. This way, if one sector underperforms, your entire portfolio won't take a nosedive. Remember, diversification is your safety net. It helps you weather market storms and achieve consistent returns over the long haul. Section 6. Your investment roadmap, creating a winning strategy. Before you hit that buy button, take some time to create a solid investment strategy. This is not just about picking stocks or bonds. It's about having a comprehensive plan that aligns with your financial goals and risk tolerance. Think of it as your roadmap to financial success. Just like you wouldn't embark on a road trip without a map, you shouldn't start investing without a clear strategy. Start by defining your investment goals. What do you want to achieve with your investments? Are you saving for retirement? This is a common goal and requires a long-term strategy. Or perhaps you're saving for a down payment on a house. This might require a different approach, focusing on medium-term investments. Knowing your why will guide your investment decisions. It helps you stay focused and avoid impulsive decisions that could derail your progress. Next, determine your risk tolerance. This is crucial because it affects how you react to market volatility. Are you comfortable with market fluctuations, understanding that they are a normal part of investing? Or do you prefer a more conservative approach, where your investments are less likely to lose value but may also grow more slowly? Your risk appetite will influence the types of investments you choose. Stocks, bonds, mutual funds, real estate, each has its own risk and return profile. Finally, consider your investment time frame. How long do you plan to keep your money invested? Are you investing for the long term, like 5 or more years, or the short term? Long-term investments can often weather market ups and downs better. Your time horizon will impact your asset allocation and investment strategy. A longer time frame allows for more aggressive investments, while a shorter time frame might necessitate a more conservative approach. Remember, a winning strategy is not set in stone. It should be reviewed and adjusted as your financial situation and goals evolve. Regularly, check your progress and make necessary adjustments to stay on track. With a well-thought-out strategy, you can navigate the complexities of investing and move closer to achieving your financial dreams. Section 7. Avoiding common pitfalls. Navigating the market like a pro. The stock market can be a tricky beast, especially for beginners. But don't worry, I'm here to help you dodge some common pitfalls. One common mistake is emotional investing. Don't let fear or greed dictate your decisions. Stick to your strategy and avoid making impulsive moves based on short-term market swings. Another mistake is chasing hot stocks. Just because everyone's talking about a particular stock doesn't mean it's a good investment. Do your research and make informed decisions based on facts, not hype. Finally, avoid overtrading. Remember, patience is a virtue in investing. Don't constantly buy and sell stocks, as this can eat into your profits through trading fees. Section 8. Time to invest. Start small, dream big. Congratulations, you've made it to the end of this crash course on stock market investing. Now it's time to put your knowledge into action. Remember, you don't need to be a Wall Street guru to start investing. Start small, stay consistent, and focus on your long-term goals. Remember, the stock market is a marathon, not a sprint. There will be ups and downs along the way, But with patience, discipline, and a sound investment strategy, you can achieve your financial dreams. So what are you waiting for? Start investing in your future today.